I don't know, but I've been told uranium ore's worth more than gold. I sold my cad, I bought me a Jeep, I got that bug and I can't sleep. Uranium fever has gone and got me down. Uranium fever is spreading all around. With a Geiger counter in my hand,
I'm going out to stake me some government land.
Uranium fever has gone and got me down.
Hi everyone, my name is Nicholas Merton, and today I want to spend a decent amount of time to talk about a commodity that I've been keeping my eye on over the past 2 to 3 years, uranium. Back in June of 2007, uranium peaked out at a spot price of $136 per pound, and ever since then has continued on a bear market for the past 11 years, with a bottom price of $18 per pound. Most of the price fluctuation, from the run-ups to the downside, was caused by the 2000s commodity boom, where a variety of commodities saw parabolic highs and a sharp decline going into the recession in 2008. But uranium markets faced an even bigger issue: the disaster at Fukushima, where 3 Japanese nuclear reactors melted down after an earthquake, the largest nuclear catastrophe since Chernobyl. Preceding the events at Fukushima, the Japanese government, rightfully so, went about shutting down all nuclear reactors and setting high regulatory and safety standards before any other reactor could be turned back on. This inevitably led to an overproduction or supply glut in uranium markets, and with Japan at the time being the 3rd largest consumer of nuclear energy, entirely changed the outlook of nuclear energy in the 21st century. And whereas many producers were expecting competitors to cut down production due to a declining price, which was caused by already increasing supply from the commodities boom in the 2000s, as well as stagnant demand, things got even worse as the unused uranium from Japan entered into the market, making the difference between demand and supply even smaller. And as expected, with lower prices come production cuts. For example, Canadian uranium miner Cameco, the largest publicly traded uranium company, has suspended production at the McArthur River and Key Lake operations, some of their largest mining operations, for a minimum of 10 months, and are willing to keep it open longer if prices stay low. Along with Cameco, Paladin Energy, a large uranium miner in Australia, has shut down operations at Langer Heinrich, which produced an annual equivalent of 2% of global demand. And last but definitely not least, Kazatomprom, the largest producer of uranium globally, has pledged to slash output by 20% over the next 3 years, cutting global supply by 7.5% this year alone. But even with all this negative news, there's still some positive trends taking place. For example, in Japan, we've seen 8 reactors come back online, dispelling the fears that Japan would never see a nuclear reactor running again in its country. Along with this, Japan is continuing to make progress by reviewing over 14 of its nuclear reactor units, some of which could be reactivated as soon as 2018 and 2019. Once we see some of these reactors come back online, not only will we see a healthy rebound in demand, making up for a lot of the losses from 2011, but it will also put us back on a trajectory towards healthy, long-term growth for uranium markets. And Japan isn't going to be the only country increasing its demand over the coming years. According to the World Nuclear Association, the top 10 nations that have current construction plans for nuclear reactors have a combined weighted power of over 46,000 megawatts, the equivalent of a nation larger than Japan being added to demand. But to really put this all in perspective, let's listen to a clip from Amir Adnati, the CEO of Uranium Energy Corp.
I think it's what we have for the first time in the uranium market since Fukushima happened is we have a genuine, bona fide, perfect storm. And so to me, when I look at sort of the culmination of factors that are at play right now, we have for the first time momentum building in Japan with the Japanese reactor restarts. And the recent election and Abe's victory in Japan really helps kind of underpin that momentum going forward. You have the Japanese momentum happening at the same time as real supply cuts. And when I say real, it was different when the Kazakhs announced the cuts in January. It was positive, but it wasn't a shutdown of one large mine. The McArthur River shutdown, the news that came out on November 8th, is the largest uranium mine. It's big, it's meaty, you can see it, and you can really feel the impact. And for the first time since Fukushima, we have more reactors under construction now than we did pre-Fukushima. And last year and the year before that, more reactors were connected to the grid than in 25 years. So I think it's more about the perfect storm. We have a culmination of factors playing together and unfolding at the same time now. And this to me is what really stands out. I'm confident to say that I believe the worst is behind us. I'm not very good at sort of forecasting where I think it's going to be, this year or next year, but we know the producers can make money at these levels. They can make money probably until we see prices back over $40. And we know that incentive price to build a new uranium mine is north of 60. I think you figure out the rest from there.
Even when factoring Amir's talk of a perfect storm, we have to ask the dire question: have uranium markets actually bottomed? Uranium prices have still remained relatively low to the lows that we saw back in 2016 at $18 per pound, and uranium stocks and ETFs have still remained relatively low as well. So, is it time for a market reversal just yet? Let's go ahead and spend some time to take a look at the macro trends as well as some of the shorter term trends in uranium equities. Today we're going to be analyzing the Global X Uranium ETF, otherwise known by its symbol URA. URA is a great indicator to get an idea as to where equities are currently sitting in regards to the uranium market. It has a good mix of large, mid, and small cap companies within the uranium sector, predominantly miners. The first thing that catches my eye on a macro level is the decline that URA has seen since 2011, a 90% drop from its highs. To many people, this might appear as a bad thing. However, to institutional investors and those like myself who like to play the longer-term swings in any given market, this is exactly what we want to see. Remember, institutional traders buy low and sell high. Another positive sign that we can see on the Global X Uranium ETF is the fact that volume is increasing, indicated at the lower part of the chart. Now, it is fair to state that with any given drop in price, it's most likely that you're going to see an increased level of volume due to the fact that the shares cost less. However, even factoring in for the decline of price, we're still seeing higher levels of capital and volume traded on the uranium ETF, which shows that larger institutions are stacking up for the longer-term trend. And last but not least, we're seeing solid price strength confirmation in the Global X Uranium ETF. In fact, the ETF has not made a new low since back in January of 2016, signaling a potential bottom in the market and building a foundation for an uptrend. Now that we've gotten a good perspective on the macro trends of uranium equities, let's go ahead and take a shorter time frame over the past 2 years and take a look at price action. We can clearly see that, as stated before, URA has not made a new low since January of 2016. Yet to be fair and play devil's advocate, we still have yet to see URA make new highs since February of 2017. So the question remains, are we seeing a bottom in price? What indicator is showing on the chart that's leading us towards a certain direction? The leading indicator that's signaling either a massive breakout or a breakdown in uranium equities is signaled by a simple wedge that has been maintained for the past 2 years. This is going to be a make or break moment for uranium equities. And as much as I would like to say that this is almost a guaranteed breakout for uranium, I have to be fair in stating that gold and silver over the past few months have broken out of key technical patterns that they'd been building up over the past 2 years and have broken down to lower levels of price. So we have to keep open to the idea that this one technical pattern might not be enough to break price action much higher, and that it might take a little bit longer for uranium markets to start ticking upwards. That all being realized, the wedge is the key technical pattern that I'm keeping my eye on at the moment, and if the price of URA can get above the line of resistance, my sentiment will change towards a much more bullish outlook for uranium equities. So in summary, I haven't gone long just yet. However, I'm keeping a sharp eye on uranium. To me, it seems like the most interesting play in the commodity space, and going into 2019 and 2020, I see a much brighter future for the gold and green.
And I can't sleep. Uranium fever has gone and got me down. Uranium fever is spreading all around. With a Geiger counter in my hand,
I'm going out to stake me some government land.
uranium